Good evening, everyone. We're going to start shortly. All right. So, good evening once again, and welcome you all in the weekly webinar of Week Ahead with Religare Technicals. In this webinar, we talk about markets, how the benchmark indices performed during the week, what was the sectoral trend, followed by the top five gainers and losers from the Nifty 50 basket. And then we talk about what's our view on the key indices, both Nifty and the banking index for the coming week. And some of these charts which are looking good or weak for the next week, where one can look for fresh positioning. We end this session with a quick poll, taking your feedback and followed by the Q&A. In case if you have any question related to the presentation, any sector specific queries, you can ask during the Q&A session. Before we begin, a quick disclaimer that the content that we share here are the technical insight based on the chart that we have. It's not a trading or an investment recommendation. So before making any decision based on the input shared, please check with your financial advisor. Now, talking about the markets, after 3 successive weeks of gains, market retraced, market witnessed sharp selling rather in the passing week and shed nearly 2.5%. So both benchmark indices, Nifty and Sensex, ended closer to the week's low, around 19,674 for the Nifty and 66,000 roughly levels for the Sensex. On the sectoral front, as you can see on your screen itself, there was no gainer. All sectors, witnessed profit taking or decline, where in reality, metal, banking, pharma, and financial services were among the top losers. Talking about the Nifty 50 gainers and losers, we had counters from across sectors. So first on the list is Asian Paints on the gaining side. Then we had Power Grid, Coal India, Titan, Britannia. But at the same time, the banking heavyweight, SDFC Banking, it shed nearly 8%, a very sharp decline during the week, followed by Ultratech, Wipro, Dr. Reddy's, and JSW Steel. So what we are seeing that there was hardly any gains among the top gainers, but when it comes to losers, the cuts were severe. Now, what we are anticipating in the index, in the Nifty index, first we'll talk about. So this is what, where we were around the last week, means around 20,200 mark. And now we have retraced to 19,700 levels. So if you remember that 19,200 was a zone from where we started this recovery, and almost 1,000 points kind of a rally that we had in the Nifty index in the, last 3 weeks. But this week, with cut of nearly 2.5%, we have retraced half of that move from 19,200 to 20,200. So 19,700, we are in the middle of that, entire move that we have reached. Also, this yellow line that you can see on your screen, the short-term average, Nifty is closed below that mark on the daily chart. So if you remember that last week, we were discussing that these are not very decisive candles. The last 2 trading session candles were not very decisive. And we may see some consolidation of profit taking, but we were not anticipating, this such a severe decline. Because usually what happens is that when the market tone is positive, we see more of a time-wise correction. Means the price-wise retracements are less severe that we usually manage to hold the short-term averages. But this decline indicates that markets are likely to spend more time, in a range now, going ahead, considering that after making a new milestone at 20,000 plus mark in the Nifty, it's something that the indications that we are getting from the index. At the same time, the global markets are also indicating lack of decisiveness, which is also somehow weighing on the sentiments. So keeping that in mind, we feel that now, in case if there'll be any recovery in the next week, 19,900 to 20,100 zone is going to be the area of resistance, somewhere around this and this gap area. This area is going to be the area of resistance in case if there'll be any attempt of recovery or a rebound. Downside, this zone from where we had this breakout roughly around 19,650. So we have almost reached to that mark. So 550, 19,550 to 19,200. This almost the area of this trend line where we have multiple supports. So consolidation is more likely. We are not anticipating any severe decline. Means we are not anticipating the entire negation of this move. Means there's a possibility that situation may deteriorate, considering the kind of clues that we are getting from the banking, which we're going to talk about later, plus some of the index majors like Reliance, ITC, which are participating on the negative side. So there is a possibility, yes, the tone is likely to remain positive, but at the same time, IT, auto, selectively from the FMCG pack, they are also contributing or helping the index to maintain the positive tone or cap the damage. So this broader range, 19,200 to 20,100, is what could be the broader range, but intermediate 19,900 to 19,550. So broadly, one should look at these two levels for any fresh positioning. But since we are seeing, bigger candles, means decisive candles, gap downs, restrict your position in the index, at least for a time being, until we see some stability. Now, talking about the banking index. So banking, we were here around the record high last week. We mentioned that since we have tested the record high, there is a possibility that we might see some profit taking. But the major culprit is basically the banking, because the initial session was okay, but post that this is sharp decline that we seen in banking index, which has led to this retracement again in the breakout range. So this was the breakout range after which we saw this surge. So we have again penetrated that breakout range. So what it indicates is that the positive tone that we were seeing in the banking has faded out. It was down roughly around 3.5%, maybe more than that. Plus the negativity that we were seeing in the select private banking majors. We have been kept on mentioning that SDFC, Kotak, they have been among the underperformer within the private banking space. But Axis and ICICI also, they also retraced sharply, though they are still comparatively better. But yes, the entire private banking space is basically keeping that pressure high on the banking space. At the same time, interestingly, the PSU pack is outperforming, it's holding strong, it's inching higher. So one can selectively look at the PSU packs. Like we always talk about SBI, Bank of Baroda, Canara Bank being the preferred stocks, considering the kind of outperformance that we have seen these names in the recent recovery. But now we are seeing the second rankers also, stock like Union Bank, Bank of Baroda, PNB, they are also contributing and recovering. But still, we would recommend to stay selective because the index trend is down. So instead of like focusing more on positive recommendation, positive side of trades, one should maintain a balanced approach by maintaining both sides of the position. So for banking, as an index, 44,250, this 100 EMA, the green line, and then 43,600, this low of this consolidation is going to be the area of support in the coming week. And in case of recovery, the first resistance could be closer to this, almost the high of this red candle, followed by 45 900, this area of gap that we have on the banking index. So both indices are looking negative, but since we have already seen a sharp cut in the passing week, initially we expect some pause, some consolidation, and then the market tone, in the private banking majors and select heavyweights would decide the market tone in the coming days. But as of now, we feel that the downside seems capped, at least for the Nifty, and we expect outperformance in the Nifty, considering the kind of slide that we are seeing in the banking and financial space. Now let's talk about the stocks which are looking promising. The first on the list is Infosys from the IT space. So if you remember that during this webinar, we have been discussing about largely the IT majors. So we have started with HCL Tech, then a few weeks ago that we talked about TCS also, and now Infosys. So this pack is basically showing resilience irrespective of the market tone. Means we are seeing excessive volatility, but they are managing gradually higher highs on the daily and the weekly graphs. Infosys post this almost 1.5 year of corrective tone, this declining channel breakout is holding strong, ended marginally cut with the marginal cut. So we expect this this recovery to extend further in the coming weeks, and 1650 1700 zone could be the area where it might test. So Infosys could be one of the candidates, considering the kind of choppiness or volatility that we are seeing in the rate sensitive, and plus the kind of outperformance that they are showing. Next on the list, again from the defensive space, Tata Consumer. So this stock also, like after spending nearly 2 years in the consolidation band of 675 to 825, I've been hovering in a very narrow range around the record highs, and we've discussed about 850, 845 levels earlier, and now quoting at the record high despite the negativity which we are seeing in the market. That clearly shows the outperformance and the relative strength in the counter. So in case, even if the market corrects, we believe that this outperformance, this positive tone would continue as long as we are holding above 825 mark in this stock. So there's one such stock alongside with Infosys, which looks positive to us. Lastly on the list, this is Vedant. Vedanta in the middle space is the weakest stock as of now. Post this attempt of recovery and retesting of the previous record highs, the stock couldn't surpass that mark decisively and witnessed the selling pressure towards the previous low. And after spending nearly 2 weeks, 3 weeks around that area, we witnessed a breakdown, and now we are seeing the follow-up move as well. So we expect this underperformance to continue and the stock to retrace toward 200, 205 levels in the coming days. This could be one of the stock which one can keep on radar for the shorting trades. So net, both banking and Nifty looks weak with a bias initially on sideways side until we decisively reclaim 9900 levels. And for the banking, it is 45 300 mark. But clues, especially from the private banking majors and the select heavyweight like Reliance, until the tone doesn't change, we doubt that we're going to have a meaningful recovery. So stay stock specific amid this consolidation and choppiness that we are seeing in the indices. And we talked about Infosys and Tata Consumer, which look positive to us, and VEDL, which is a weak candidate among the middle counters. So this is all from the presentation part. Now we'll do a quick poll and then we can start with the Q&A. So please fill in your feedback, and then you can start posting your question using that Q&A tab. Please quickly fill this feedback so that we can start with the Q&A. And once you are done with the feedback, you can start posting your question using that tab. Please quickly fill this feedback. All right, so let's start with Q&A now. And first question from Mr. Avik Ganguly, that under what name we can find these videos on YouTube. So the English version you can find under the live. Once you go to the Religare Broking YouTube channel, you can check the playlist live videos, live sessions. Under that, you can find this English one, and we post a summarized version of this in Hindi as well over the weekend. So you can check the same in one of the paid playlist as well. Okay, so question on positive news. So sorry, I can't help you with the news. We usually talk about the what part, not the why part. So what happened during the AMC stocks? I doubt that I didn't see any meaningful action in the AMC stock as such. Yeah, they were marginally up, but it's not something very specific. It's 1% kind of move is very normal. Okay, so since we've talked about Tata Consumer, there's a query on that. Is it a good buy right now, or should we wait for it to decline further? So, see, I've shared my view. It's completely up to you. It's completely on your own discretion. You can check with the financial advisor whether you want to go ahead with that. Charts indicate that it's one of the best holding counter, which is holding around the record highs, hovering in a very narrow range. So that shows strength. So in case if there'll be any recovery in the market, or the outperformance within the sector, let's say in the FMCG pack, I feel that there is a possibility that the Tata Consumer would top the list among the outperformers. Okay, next we have question from Mr. Jayadul Islam, that how we can learn derivative markets. So Mr. Jayadul, we conduct a derivative session also regularly. So if you are associated with us, you can check the same on Dynami app. We send notification for registration. Plus on the social handle also, we keep on sending details regarding the derivative classes, wherein we talk about basics, we talk about advanced. So you can just follow our channel and then you can get all the details. Okay, next week, which stock entry price for more gains? Sorry, so Mr. Chandrasekhar, actually we do not talk about any particular stock. The idea behind this webinar is to give you the insight how we are seeing the market. So I hope that we made it very clear that markets are not looking very good, considering the kind of slide that we have seen after 3 weeks of advance. So one should be stock specific. We talked about a couple of names like Infosys, Tata Consumer, which look positive to us. and VEDL on the negative side. So these are some of these stocks. If it fits in your criteria of buying or selling, you may choose the same. No stock specific queries that I've requested earlier also. Okay, so we have a query from Dollar. Sir, we need to know about the PSU banking sector. Banking is going down and PSU banking is going up. Yes, so see, that is what I mentioned during the presentation itself, that private banks, we were seeing underperformance from SDFC and Kotak, and Axis and ICICI were holding strong. IndusInd Bank was also hovering in a range. So after this slide, across the board, the PSUs has definitely upper hand, and the PSU index have managed to end. I'll just share the time frame. It's almost 20-21 years of consolidation, or a negative trend that you can say, which has ended in the early 2023. So after this such a prolonged period, usually we see a new cycle that starts, and that is what we are seeing in the PSU index. It's trading at the record highs now, up around 3% in this week and roughly around 16% in this month. But I still recommend that one should not get carried away with this breakout in the index. We are seeing all stocks in the PSC basket participating in some way or the other, but the top performers like Bank of Baroda, which is trading at the record high, SBI, which is holding and hovering in a range around the record highs. Then we have Canara Bank, which is trading a 52-week high. These are some of the names wherein we are seeing consistency. Indian Bank also, that falls into that category. Now we are seeing other stocks also, like Union Bank, Bank of India, PNB. These stocks are also contributing and recovering. But since it's a highly volatile pack and the index is down, and we are trying for long trades against the trend in the sector, one should stick with the names which are comparatively less volatile. So that's the reason that I always recommend to choose the top performing names instead of the laggards. Okay. Yes, Mr. Rajiv Kumar has query on mid-cap index and Nifty, Fin Nifty. So mid-cap index still, in this week also, we saw that the Nifty mid-cap index did well, and it's almost around 1.5% kind of a cut that we've seen in the mid-cap, and 2.5% in the small cap. But still is comparatively better to what, because usually, the broader indices underperform the benchmark. That's the normal, criteria. When we see the fall in the index, they usually tend to fall higher, both mid cap and small cap. But as of now, we are still seeing both the indices showing resilience. But in the previous webinar also, I have recommended that after this 6-7 months of outperformance, there is a possibility that we could see some consolidation of profit taking days to come, and maybe in the later part of this corrective phase, they may also join the index, or start witnessing correction. So be very strict with your stop losses, especially in the mid cap and small cap space, because the cuts are usually sharp. Means 5%, 10% cut is not a big deal for a small cap or a mid cap counter. So maintain stop losses in case if you're already lost in some of these position, reduce your position, take losses. This because when the markets were going up for the last 6 months, nobody was bothered about what is going on, because everybody was finding some trade or the other which they buy someday, and after a couple of days they were selling in profits. So if you are okay with booking profits, it's natural that we will see some correction, and that might result in some losses also in case if you're holding stock at the wrong prices. So this is what I recommend for the mid cap index. For Fin Nifty, like in line with the banking index, it's a similar pattern which we are seeing. SDFC has slightly higher weight in Fin Nifty, and the index has reached to 19,740 levels, roughly around 4% kind of a cut. The index might further retrace to 19,400, 450 level, the previous swing low, and plus the consolidation breakout low as well, the neckline area of this previous consolidation. So 19,400 is something that one should keep a close eye on. Below that, the Fin Nifty might witness further deterioration in the trend, and it could slide to a newer low ahead. So, okay, next question is on whether it's good to invest in mid-cap segment at current levels or not. So, I feel that still you might find, certain stocks which are, rightly valued, but it's very difficult, after this surge. So, it's prudent that one can look at the fundamental factor, because you're talking about the investment, and that too after a very strong rally. So look for stocks wherein the valuations are still okay. We can take help from the financial advisor on that part, and accumulate them gradually during this corrective phase. I would rather suggest, because after this surge, even if the counters are okay and the valuation is good, when the market corrects, it usually engulf the entire space. So it's very unlikely that some of the stocks completely trades in a different direction. So accumulate them, the counters which are fundamentally sound. And in case if you are associated with us, you can check with your branch or business partner. They can write to us, and you'll get the list of stock where you can make investments. All right. Okay, next question from Mr. Rajiv Kumar on what is our view on next 4-5 days. This, Rajiv, I guess it's in continuation. So it's our view is for like at least fortnight, 15 to 20 days, means for 2 weeks, and maybe more than that also, especially for the mid cap. And for financial Nifty also, we feel that below 19,400, this situation may deteriorate, and in maybe like we are set for a prolonged consolidation in the market, means for a month or maybe more than that. So we have a very clear view that mid cap, one should be very strict with their stop losses, existing position, and for fresh bet, look for the stocks which are showing outperformance during this decline. But reduce your position and maintain strict stop losses is something that we advocate in both these paths. Okay, this question: to make a new position in any stock. This question from Mr. AR, that how much percentage does any stock correct from its high to get at correct level to buy? So okay, so I just trying to comprehend that in case if you are looking for buying a stock which are performing well, because that's why it's trading at the record highs. So how much of retracement one can look at to re-enter? So there's one way to look at it, is that in case if we have seen any consolidation breakout, then the area of breakout from where we saw this entire run up is one of the best area to accumulate or re-enter any stock. Other way is like just we were discussing about Nifty, that 50% of a move, 19,200 to 20,200, that was the range that Nifty has scaled in last 3 weeks, and we have retraced, means we have come down from 2,200 to 19,700. That is a 50%. So 50% is okay. In case if stock goes up to 10 to 20 and come down to 15, 15 is okay. Means 50%. It should not retrace more than 50% of this previous up move. That shows strength. In case if it comes down below like 50% of this entire previous up move, then means it shows that bulls which were holding strong and taking the stock higher, they might lose the position. So not more than 50%. Best is 23%, 38%, as per the Fibonacci levels that we usually use. In case if you understand technicals or you want to understand about it, you can just Google Fibonacci retracement and you'll get the comprehensive answer for this query. Right. So, Deepak, though we talk about direct equities, but since the question is relevant for all, that any index fund, making investment through index funds, so that is one of the strategies that people use. Those who are like using a SIP mode or a regular investment mode. So yes, index fund is one of the better instrument in case if you are passive investors. It means you don't want to actively pick and choose any particular stock. So that is definitely an instrument that one can look at, and especially if you are starting your investment journey, then you can definitely look at index funds also. Rail stocks, Mr. Ray have asked that rail stocks have shown correction, and are we going to see any bounce back? So, see, we had this discussion earlier also during this webinars that the stocks which usually see phenomenal momentum. Just to give you an example, that stock like IRFC, right, 30 to 90. Almost 3 times in less than 2 months. So there's no rule that the stock can't go beyond that 4 times, 5 times, 10 times. But in a normal scenario, when this happens, how much risk that you are able to handle if there is no correction or consolidation during this journey. So if you are okay, like, taking 30-40% kind of a risk on your capital, then you may continue to hold, because there could be a another level of euphoria. So stock specifics, usually that is why we recommend to avoid. But if I'm holding those stocks, railway stocks, I would rather prefer to reduce my position, especially the stock which have already moved up. I'm not talking about IRCTC here. IRCTC we have not participated yet, but rest of the stocks from the railway infra space, I would reduce my position even if I'm lost, and at least wait for a time being to see whether it consolidates or witness further recovery or make a new high. Until I see a new high, I doubt that I'll be making any fresh investment in these stocks. So Mr. Jahir Islam asked about Vedanta, that why we've selected, just to share the views again. So Vedanta is basically a clear-cut underperformer within the metal space. So the metal index is holding strong. The other counters are performing well. They are consolidating in a range. But Vedanta, after the failed attempt to break out from the previous swing high, the record highs, witnessed a sharp cut. And after a marginal consolidation around the previous swing low, it has formed a fresh shorting pivot, followed by the breakdown. So that clearly gives us the indication this underperformance which we are seeing in the stock is likely to continue. So, all right. So, see, Mr. Deepak, I've just shared that index fund. Definitely, you can look at. If you are like starting your journey in the markets and prefer the passive approach to make your investments. So, Mr. Jai Islam, anything which is listed on the exchanges, you can definitely buy from our platform. And in case if you face any challenge, you can check with your, you know, relationship manager at branch or the business partner to whom you are associated with. Right. So, with this, we have answered all the queries. Yes. So next week is going to be the week of monthly expiry on 28th, that is Thursday. So on 29th, we'll have a session on derivatives, the rollover, the kind of rollover that we see in the indices or stocks. We'll talk about that in detail. So till then, goodbye. Thank you for participating. Take care.